And so this is interactive. If you have questions, I invite you to ask questions, and even after, you can email me any questions that you have through the Contact Us page. So before we begin, remember that trading is risky. The disclaimer, as always, trading is not for everyone. Please remember that you should understand the risks involved with trading. So just be careful when you start trading. I recommend everyone begin practicing, so you can download the NinjaTrader charting platform directly from NinjaTrader or from us. Get a live data feed if you need one, and start practicing. So before you trade live, practice, and then once you're ready, you can start with the micro E-mini, or you can start with one E-mini S&P. Take it slow. All right, so what we're going to do here is look at the type of orders that exists. And besides the signals that you see here showing up here on the chart, which I think is a good representation of the DayTradeToWin TradeScalper, the Atlas line, and so on, what I want to do is first look at the dome here. This is called the dome, the depth of market. It's also called the price ladder. And when you look at the prices moving up and down, the way that we're going to approach this is to look at whether or not first you want to use a market order, whether you want to use a limit order, or whether you want to use a stop order into getting yourself as a buyer or a seller into the market. So there's typically three different types of orders that you can place when entering into the market. So a limit order basically says, I want this exact price or better. That's really what a limit order does. So if you were going to go short at 34, 35.50, the only way to get this exact price or better is by placing a limit order. So on the sell side, this is the sell side over here. If you can see, the right hand column is the sell side. The sell side, anywhere above where the market is trading, this is where you would place the order. So if I left clicked here, this would give me the option for a limit order or a sell with a market if touched. And I'll go over both. So if I left clicked here,
order filled.
This is considered a sell order up here.
Target filled.
If I wanted to buy the market, I would have to buy it on the buy column, and here on the left hand side, anywhere below where the market is trading, this is where you would place your limit order or your market if touched order. So remember, if you're selling the market on a limit or a market if touched, always sell it above where it's currently trading. If you're buying the market with a limit or market if touched, always below to where the market is currently trading. So you would have to left click here and say, do you want to sell limit at this price, whether it's the E-mini or the NASDAQ, and so on. Okay, good, Orlando, thank you. Is based off of the market that you're trading, and you can adjust it. So I have different markets working. I have about 6 monitors on this computer, and some monitors are using the NASDAQ, some monitors are using the E-mini, and you would definitely have to adjust here the instrument based on the chart that you're trading. So if you do want to have multiple price action ladders or domes, or what you see here, the price here moving up and down on this depth of market, you would either have a second dome or you would adjust it here in the same way, right? So depends on really how you want to look at it. Typically, if you have just one dome, one of these domes here, it works the same way: limit order, market order, above where the market is trading, below where the market is trading. Same thing here. You would left
order
click
submitted.
For a limit, above to sell, or
order canceled.
Left click below where the market is,
order submitted,
to buy. Okay, so first let's make sure we understand the limit order process is I want the market to retrace down to this price, or I want the market to retrace down to or up to this price.
Order submitted.
So it depends on if you want to be a seller, the market has to come up. If you want to be a buyer, the market has to come down. Always think of limit orders or market if touched orders in that way. All right. So Orlando, Brad, Jeff, this understanding of a limit order is always a retracement. The next thing is the type of orders that you could place market if touched as compared to a limit. So a limit order will only fill you at this price long or this price short or better. It won't fill you at any other price. Sometimes you can get a better price, but it won't give you slippage. A market if touched uses the same process. You still have to place an order below where the market is trading, but a market if touched, the difference is that it
Order
says
submitted.
when it touches this price, enter directly at market regardless of the price you get. So you have slippage typically. Sometimes it's in your favor, not always. So a market if touched basically says if it touches this order at this price, just get them in. I want to go long at this price.
Order
And the same thing is
canceled.
true if you want to sell the market and use a market if touched.
Order submitted.
You would say, I want to enter at this price. Just get me in. It doesn't matter if there's slippage. I just want to be short at this price. So a market if touched has its advantages because you immediately enter. You don't have to wait for an order queue. You get filled instantly. The disadvantages is you could have slippage. So MIT and limit order are placed in the same way. Left click either above the market to be a seller or below the market to be a buyer.
Order canceled.
Now you can alternate between the two, and I do as well, by holding down the control key. So on NinjaTrader, it varies on different charting platforms, but on NinjaTrader, if you hold down the control key, you can switch between a limit
Order submitted.
and a market if touched.
Order submitted.
Okay, so you have the option of using one or the other. Now what you're seeing here is called the chart
Order
trader.
canceled.
And the chart trader,
Order
even though
canceled.
I personally don't use the chart trader exclusively, I like to have it turned on just so I can see where the signals and my orders are being placed. So you can see that when I do place a market if touched order, for
Order
example,
submitted.
it shows me on the chart and it shows me on the dome the exact same price and placement. All right, Joshua, just send us an email if you have any issues with getting a data feed for instruments. It's not, the data feed sometimes doesn't work with all instruments, but just send us an email, okay? And if you place a market if touched order
Order submitted.
or a limit order, the market has to come back to fill. So it's very simple. You're waiting for the market to come back to fill you. Now this can be moved around like this, just like we can move them around on the dome. So this can be moved around either on the chart trader or on the dome, and it makes it a little easier to move your targets and your stops if you have to. And remember, if you do want to get filled, all you have to do is click on it and place it where it's currently being traded or just above. And that way it instantly fills you. What you're saying is, I'm not going to wait for this price. I want to be instantly filled. So you can move these around anywhere you want. So you are able to move these prices as you see fit. All right. So if anyone has any questions as we go over the limits and market if touched and how to place these orders,
Order canceled.
let me know before I continue. All right. So the first order that we see, market if touched or limit. The next order is what we call a stop order. And a stop order, what you usually hear is a protective stop, right? So you enter into the market and then you have some type of protective stop. So a stop order is just an order. It could be used to enter into the trade or it could be used to get out of a trade. But remember, it's just an order. So if you wanted to place an order on a stop, it's called order on a stop, to go long, the way that it works is that you're placing the order in intention as the market goes up, you want to be filled here. So remember, a limit order or a market if touched is always a retracement, right? You want to see it retrace down. This here would be a limit order or a market
Order
if touched,
submitted.
right? We want the market to retrace down to this price as an example. But a stop order doesn't work that way. A stop order, you want to see the market go in the same direction. So let's say that I wanted to buy on the stop at 34.48. So I would come up here. On the left hand side is the buy column, and I would use the middle mouse button and I would click down on the middle mouse button. This is the middle mouse button. Your wheel, your scroll wheel, is actually a button, and you can press down on it, and that would be the way to get into the market on a stop. All right, so the same thing. If I wanted 34.49, right, so I don't get filled here, 34.49, I click on that middle mouse wheel, and I
Order
say yes. So
submitted.
now we have an opportunity to go long as the market goes in the same direction up. So that's important to understand the difference between what a stop order does. It's just an order. And so most traders, when
Order
they think
canceled.
of the word stop, they think of protection. And it is used as protection, but it's just a type of order that exists. So the best
Order
way that I can
canceled.
explain that to you, especially for the new traders, is that let's say that you went long the market. So I'm going to go long. I'm going to place an order here,
Order
a limit
submitted.
order to go long, and I'm going to force a fill. So you can either move this to get filled or
Order
put it right
filled.
there, and now you see one contract long. Okay. Now once you're long, we have to protect ourselves with a stop, right? In case the market goes against me, I want to protect myself. So on the sell side, we're going to use a stop. Again, it's the same thing. As the market goes down like this, we want to protect ourselves with a stop. So as the market goes down, remember the sell column is the right side. As the market goes down, we're going to have a stop. So again,
Order submitted.
it's the same type of order. It's a stop order, but this time we're using it to get out of a trade as opposed to getting into a trade. So remember, a stop order is just a type of order that as the market is going in that same direction, you're getting in or you're getting out. So it depends on how you're completing the round turn. If you're entering for the first time on a stop or you're exiting your current trade on a stop. Anyone have any questions on that? How that works? All right. So let me just close this out.
Order
The same
filled.
thing if I wanted to be a buyer. So I'm flat, the word flat, I click down here and it says buy stop market
Order
like
submitted.
that. That means I'm entering for the first time. I'm flat. I want to enter long to go long as the market hits this price and continues. And once that happens, I will then put a protective stop here. Again, it's just a stop order on the sell side in case it goes against me. All right, so the distinction here of a stop order and a limit order is really where and how you place the trade. You can only place stop orders above to be a buyer or to be a seller as it goes in the same direction. For limit orders, though,
Order
it's different.
canceled.
It's always a retracement. A limit order like this,
Order
or
submitted.
market if touched, or like this.
Order
Right,
submitted.
so we want the market to come down to fill us or to come up to fill us on a limit or a market if touched. It may be a little confusing at first
Order
when
filled.
you see this for the first time, but with practice and with an understanding of what the orders are trying to accomplish, it really does help you with on the spot, at the moment when you're about to place a trade, you need to know what to do. So for example, the entry long at 34.48. So I see this is green. That means I'm long one contract. This here, if I keep it here, it would be a profit target. As the market goes up, I'm selling it at a profit, MIT or limit, right? It's retracing up to sell it. But at the same time, if I click the middle mouse button down, it
Order
would be
submitted.
a protective stop. So it goes against me. It's going to stop me out. All right. So for example,
Order
this
filled.
trade here, 34.49, if we are going to analyze this trade here on the TradeScalper. So 34.49 is the entry. So 34.49 right over here is where I want to be filled.
Order filled.
And so I'm filled at 34.48.75. So this is where I'm filled, 34.48.75. I got filled. You could have gotten filled on a limit or a market if touched or a stop. Now, once you're filled here at 34.49, 34.48.75, and remember, I'm just using the TradeScalper software. Once that happens, you say to yourself, well, what is the target on this trade? Well, if I look down here at the ATR, this is very important. I have hundreds of videos that discuss how to use the average true range. It tells me that 2 points or 2.25 points is what the next candle could do. So that should be a target that you want to achieve. Not 1 point and not 10 points, but roughly what the market could achieve. Now, at this point, the market has already moved the 2 points, right? So 51 would be the 2 points. It's at 51.75, right? So you're going to come over here, and you could left click
Order
to
submitted.
get out of the trade once it hits this price or this price or this price or this price. And at the same time, a protective stop, middle mouse button down,
Order
like
submitted.
that. Now, you don't have to wait for this to reach your target. If after a certain amount of time, I'm big on time-based stops, after a certain amount of time, if you do want to say, okay, let me get out of this trade, it's in my favor, I'm making some money now, or I'm losing some money, but I want to get out of this trade, there's a couple of ways that you can get out of a trade as well. So one of the ways you can get out is by moving this limit or list market if touched to where the current price is trading. So even though you can move these around, you can get out of the trade
Order
like
filled.
this. Or if you want, you can move the stop up also to get out of the trade. But since I'm already out of the trade, I'm flat, I don't want to move my stop. I just want to cancel
Order
it because I'm
canceled.
already out of the trade. So just to review what you're seeing here, and there's actually 2 orders here to go long using the TradeScalper. One with both of these little arrows here, 34.49 and 34.49. They're actually, it's 2 separate orders the TradeScalper provides. They're actually on 2 different candles, and they're both at the same price to go long. But regardless, if you look at the target of about 2 points, 2.25 points, that would be your target. All right, that would be your target. Any questions so far? So that TradeScalper signal to go long hit the 2.25 or 2.5 points that I would say be a little bit more conservative, about 2 points, 2.25, and you're finished. You're done. You're looking at the next trade. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.